Hi there, welcome once again to Dukascopy TV. I'm Ben Jones. On the line to discuss some of the recent Japanese data and whether South Korea is on the verge of following in Japan's footsteps is Jonathan Buss from Oxford Economics. Jonathan, let's begin by looking at Japan. Some of the data that was released earlier today seems to be extremely positive at face value. Unemployment dropping by 0.3% to 3.5% and retail sales were double more than most estimates at 1.6%. What's been contributing to this positive data?
Well, firstly, on the consumer side with the retail sales data, what we're seeing here really is a tentative recovery in retail spending from a very low level. Back in April, the government, as part of its plan to stabilise the fiscal situation, raised the sales tax from 5% to 8%, and this triggered a sharp fall in consumption spending in Q2. And it's only now that consumers are hesitantly starting to return to the market. So although it is true that retail sales are rising, and indeed they may even be rising a little bit faster than most economists had initially estimated, they are doing so from a very low base. So the big picture really is that the Japanese consumer remains very fragile in the wake of April's tax hike. And this isn't surprising because real wages in Japan are still falling. Nominal earnings are currently growing at a little above 1%, while inflation was above 3% in August. And in that environment, we can't really expect too much from the Japanese consumer going forward. Regarding the unemployment data, although at the high level it is undoubtedly true that the Japanese labour market is quite tight at the moment, and this will provide some relief for Japanese households, what is actually striking is that despite the low unemployment rate, wage growth is still quite unremarkable. Indeed, this is arguably one of the reasons why the labour market has held up so well, namely that real wages have been falling, thereby encouraging employees to keep on hiring even as the broader economy has deteriorated.
Contrasting to that, there are a few releases that disappointed. Is Japan's economy unpredictable at the moment? And how much of this is linked to speculation over a further tax increase?
I think uncertainty about whether the second sales tax increase will go ahead, currently planned for October 2015, I think this probably isn't a major factor right now for consumers and firms, simply because they are still dealing with the fallout from the last tax hike. For example, the big disappointment that you mentioned in this month's Japanese data was on industrial production. Now, the manufacturing sector has been quite weak in recent months, and this is very much linked to the fallout from April's tax rise. Basically, in response to a fall in local consumer demand in the wake of the tax hike, firms have cut back production. However, what is worrying is that industrial production has continued to fall even as consumer spending has started to stabilise, and in addition, even as, for example, foreign demand has started to improve. So yes, I think the Japanese economy is quite unpredictable at the moment.
And finally, one of the more worrying situations for South Korea at the moment is that people are saving rather than spending. Can you explain what's triggered this, how this can impact the economy, and could South Korea follow in Japan's footsteps?
Well, although this morning's retail sales data from South Korea were actually reasonably good, the bigger picture is that South Korean consumers do indeed seem to have shifted into retrenchment mode and are starting to increase their savings. Now, the South Korean government has blamed some of this on temporary factors. For example, the ferry disaster back in April reportedly led to cancellations of domestic tourism trips, thereby reducing spending on travel and other tourism-related sectors. But I think there are much more fundamental problems in this, related to household indebtedness and also to weak pay growth. In the wake of the global financial crisis, wage growth in Korea has been significantly weaker than in previous economic upturns. For a time, Korean consumers were able to maintain consumption growth despite this, basically by borrowing. But household debt is now very high, stands at almost 160% of disposable income, which is very high by international standards. And it looks as if the household sector is starting to reach the limits of how leveraged it can get. Consumers are unlikely to be able to push their borrowing much further. And so unless wage growth starts to pick up significantly to compensate for this, this is likely to lead to a slowdown in consumption in Korea. As to whether South Korea could follow in Japan's footsteps and enter a prolonged period of stagnation, this is something that the Korean finance minister has publicly expressed concern about. On balance, I think this is unlikely to materialize, there are certainly some similarities between Japan's economy during its so-called lost decades and South Korea's economy today. One can imagine situations where Korea could find itself drifting towards a Japan-type territory. In particular, the big risk here is if the slowdown in China becomes much worse. You could imagine a situation there where Korea does start to run out of policy space and does enter a prolonged period of below-trend activity.
Jonathan, thank you very much for joining me today. That's all we've got time for. Thanks for watching, and make sure you keep clicking back to Dukascopy TV. Bye for now.